Everybody, morning. Let's see what's going on. We have another day in the life of the markets with 2 days left, right? We got today, December 30th, tomorrow, December 31st. That's it. That's it. Then we're on to 2026 on Friday, first trading day. Morning, everybody. Magnificent morning monsters, and welcome back to the show where we kind of mainline the good stuff and make sense of the markets and kind of ignore all the mainstream media. That's a lot of alliteration. Frankly, all this stuff makes no sense at all when you really try to make sense of it, but we try. So today we're going to tackle a real head scratcher, a paradox so baffling. It's like seeing your brokest friend post vacation pictures on a private jet in a private island that he rented with what money? Because he's broke. I mean, I'm calling all of this the consumption conundrum. And here's the deal. If you ask the average person, I mean, I try to feel out a lot of people. I try to see what's going on. If you ask the average person how they feel about the economy right now, they're probably going to give you a look like they just bit into a lemon. The data backs all this up. Consumer sentiment is absolutely in the gutter. I mean, we're talking about 10-year lows. We haven't been this bummed out about what's going on since like almost back to the financial crisis, like when we were coming out of that. People are the most pessimistic they've been. I mean, golly. I mean, it's like people are more pessimistic than a goth on a sunny day. I mean, the vibe is basically the world's a dumpster fire, and all my money is the kindling that lights it on fire. And yet, everybody out there is spending money like they just won the lottery. The latest GDP numbers, they came in hotter than expected. 4.3% growth, powered almost entirely by you, me, and all of our broke neighbors buying, well, pretty much everything. Personal spending up 3.5%. So, what gives? What's the real story here? How can we all feel so broke but keep going like we're high rollers and ballers? I mean, it's like the entire country is in this toxic relationship with a credit card, and we cry about it at night as we go to sleep, but we go out to a fancy dinner first and then do it again the next day. Well, I went ahead and started digging in, and it turns out this economic schizophrenia isn't really magic. It's not really smoke and mirrors. It's a carefully constructed illusion propped up by a few wobbly pillars. First, let's thank our magical friend, the stock market wealth effect. For 3 years in a row, the S&P 500 has been on an absolute tear, posting 20+% gains each and every year. And do you know the last time this happened? 1997, 1998, 1999. Anybody remember what happened after that? An economy cratering hangover party that followed that? Well, for now, people open their Robinhood app, see a bunch of green, think, you know what? I kind of deserve that 80-inch LED flat screen TV. The line on the screen, it's going up. That Robinhood account climbing. It's a psychological trick, and it's working beautifully. Everybody's still spending. Number two, a huge chunk of that spending isn't just for fun. It's kind of have-to type of spending. We're not all buying yachts and champagne roses. We're buying healthcare, which now accounts for a staggering 20% of all the consumption. And you can skip the avocado toast, but you can't exactly tell your doctor that you're going to wait on that triple bypass. This is non-discretionary, unavoidable spending, and it's huge, and it's growing bigger every month. It's a captive audience. And that brings us to the real juicy part of all this. How are people paying for all of this? Especially when the real income flat. You can say it with me. We all know the answer. Debt. Our collective credit card bill is now $1.23 trillion. That's trillion with a T, everybody. We're swiping, we're tapping, we're buying now, paying later, like our lives depend on it. And at the same time, our national savings rate has hit a number, almost a record low, historically at 4.7%. And we're not just spending our money, we're spending the future money. We're draining our savings, we're racking up debt, we're keeping the party going. So you have a trifecta of unsustainable forces, a stock market that's high and tells us keep the party going. But we all know high stock markets typically end badly. We've got a mountain of debt. We've got empty savings accounts. This isn't just a conundrum. It's a ticking time bomb. We're going to pay the piper. Now, for savvy investors, this is where we could turn this into a potential opportunity. You don't run from the bomb. You figure out how to profit from the countdown. So where's the opportunity? First off, think defensive. I mean, this is a problem, and we have that have-to spending that just isn't going anywhere. I mean, healthcare sector, even though it's been beat down in 2025, it's probably not going to be the beat down, or at least the most beat down in 2026. Companies that provide essential services, medical devices, pharmaceuticals, they have a customer base that literally can't say no because, well, you only get to say no so many times before you're no longer around. And while everybody else is chasing flashy tech stocks, a solid healthcare ETF for a blue chip hospital operator like HCA Healthcare, well, that could be a fortress of stability when discretionary spending finally dries up. Now, the second thing to watch is consumer staples. These are companies that sell the stuff people need, not the stuff people want. We're talking about the stuff that you got to have to get through your day-to-day. I mean, we're thinking toothpaste, toilet paper, maybe some canned soup. That's for poor people, though, right? When people finally have their credit card-induced panic attack, they're going to cut back on designer clothes, not on actual food. We're not talking fancy food. We're just talking about food that gets the job done. The classic battle is consumer discretionary versus consumer staples. Right now, discretionary is winning, but as the cracks in this consumption story get deeper and wider, a rotation into staples, it's going to be inevitable. And third, and this one's a bit cheeky, well, you can invest in the infrastructure of debt itself. The companies that facilitate all this spending, they're making a killing right now. I'm talking about payment processors, Visa, MasterCard, maybe even some of the buy now, pay laters up until the point where it comes apart like a firm. They take a small cut of every single one of those trillions of dollars of transactions. They don't care if you pay your bills or not. They're getting paid on the swipes. It's like selling shovels during a gold rush, except the gold is all borrowed. So to recap, the American consumer is a walking contradiction right now, fueled by a stock market sugar high and a mountain of debt. They feel terrible, but we keep spending. And as an investor or a trader, you can't fix the psychology, but you can follow the money. Look at the non-negotiable spending in healthcare. Prepare for a defensive shift to staples. Consider the companies that are profiting from every single swipe. As our collective plastic addiction keeps going, and this party can't last forever, but it can stay way irrational, way longer than any of us can stay solvent. With the right moves, you can make sure you're not the one still dancing when everybody grabs a chair. Be careful out there. That's the monologue for today. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, well, there's people for that. I'm just a dude on YouTube. I get it right sometimes, get lucky sometimes. Looks like about 16% of you want to stay in 2025. Everybody else ready for 2026. Welcome to the show, everybody. This week, like I said, we've got today and tomorrow. That's it. 2025 about to be in the books. 2026 starting on Friday for trading. We have 250 trading days in 2026. So get ready for it. Get ready for it. Kind of hard to believe, right? Every week, every 5-day week we trade is 2% of all the trading days we'll have in 2026. You ever think about it that way? So every 2.5 trading days, right there, it's 2%. Got to make a difference every day. Got to make a difference every day. That's why I've been harping on this right here, my 50K challenge. All time, getting on up there, right at just about to crack $51,000 this year. I started this challenge tax day this year. The goal was to build an account, not that reaches $50,000, but that generates $50,000 consistently every month. Now, my month profit right here, 13K. That's not 50K. So I've got a ways to go on this. When I started the challenge, I thought it was going to take me probably 5 years. That was my guess. We're like 8 months in, almost 9 months in. I'm up to 13K a month right now. But you look at the 3 months, and I'm only averaging 8K a month. So, still got a ways to go. Might have a few more years on this. Keep following, keep paying attention. I'll keep sharing what I'm doing. I talk about all these trades right here every single day. The ones I do in here. Now, you may be like, well, why don't you do XYZ trades? I do in other accounts, but this is an account I want reliable income. Right? There's a certain type of trade that I consider to be reliable income. That's what I do in this account. If that's you, you want reliable income, pay attention. Pay attention. Some of you, too poor to pay attention. Told one of my kids that one time, he busted out crying. Told me he didn't want to be poor. So, yes, overnight, maybe we topped out here on Friday, grinding it down. Now, looking at this move up, that was a move up, that was a retrace, that was a move up, that was a retrace. This is enough to push us on up for another move higher, if this is a wave 4. That low, grab the right tool, the alerts are in the way. That move up off of this low, we could push it up right there. Right there. Yeah, Kimberly, my favorite subscriber. And so we've got 1, 2, 3, 4. We have a potential to push on up to a 5. I was doing this work yesterday and kind of checking in on some of my other people I follow, and I noticed that the proportion here on this pullback potentially done. Now, the level to watch is that low right there from yesterday, early morning, 10, right around 10:30 or so. If we break below that, all bets are off that we're going higher. But as long as we're above that level, we can take this right on up there. Right on up there again. That level on ES is right at 7,037.50. Now, cash index. Some of you are like, well, I'd prefer to stay on the cash index. So we've got this move from that low to that high, projected off this low, puts us right up at the 1272, 69.80. And that could be the top. If we go launching off today, into tomorrow, maybe into Friday, 69.80. That low, the low to pay attention to, until we break higher than this. And then the only requirement to complete this pattern would be a higher higher than this high right here. So these are the levels to watch: 69.40, 69.80, and down here at that low, which roughly 68.90 yesterday. So we're closer to the low than we are the. We're still not out of the woods here. That low's the low to watch right there. I guess 68.90. We're working on this retrace right now. Trying to hold on to this 618. And if we bounce, break higher than that high we made. What was that? Yesterday afternoon? Yeah, yesterday afternoon. If we break higher than that, we're probably going on up to this level right here, 69.80. Getting mixed up on the 68.90, 69.80. Same numbers, different way. That would be the target. Not 7,000. If we go higher from here, probably going to top out right there. What happens after that? Probably a revisit of the daily roadmap line. Looking like we might start 2026 into some kind of corrective move. That's a long way down, though. Yeah, let's pull it up here. It's all the way down at 65. It's 300 points down, so that could be how we start out 2026. Remember, that's kind of how we started out 2025. Took a little trip down, kind of bounced, and then took a bigger trip down to a higher level, higher time frame. Need I remind you? We came all the way to the weekly. It's a long way back to the weekly too, because that's all the way down at 55. That's 1,300 points down. So if we took another big spill, I would much rather just bounce on the daily at 65. So we'll see what happens here, but that's kind of what we got cooking right now, coming into the new year. NASDAQ looks a little bit more bearish here, and this is a caution. I'm not sure we got the guts to go higher here. This is not a setup for breaking out. This looks like we're going to roll down, come visit this area down here around 24,000. NDX, same. Looks like we're going to come back down here around 24,000. Lower highs, corrective type action. Now, there is a chance to possibly save this and go higher. If we find support right around this 25, break back above this resistance. We've got these three kind of that high, that high, that high. this level right in here. So if we come down here, turn them back around, break back higher, we could push this on up. I'm not sure it's gonna work, but that's what we got. If we're gonna have to thread the needle on that one. Otherwise, this is looking like it can run right back down here. Now, if we just push on out, anything's possible. If we just push on outward now, we just grind it higher, probably gonna stall out right up in this area. Russell, we've already got a setup for pushing on down lower. 24, 32 would be what I would expect, unless we just turn and burn this higher right now. If we can save a higher low right here, next upside target will be 2740 area, 2730, 2740 on Russell right there. I'm kind of quoting the futures numbers. I watch futures because they don't leave data gaps overnight. They trade 23 hours a day, 6 days a week for the most part. And those cash indexes and the futures, they'll kind of have to come into alignment at some point. And usually the cash index is the one that wins. So coming back up to retest this downtrend on oil. Still in the downtrend channel here. This may last well out in the first quarter 2026 before we figure out what we're doing here. Still looks like a downtrend. We haven't changed anything. This higher low doesn't, still lower high, higher low, doesn't mean anything, and probably still set up for going lower. Gold took an initial drop off the high, back testing the breakouts. This is interesting. If we turn it right here, this could push on up. 4,500, 4,600, 4,800. So it's interesting right here. We've got to watch what happens. If we come up, stall at a lower high, start pushing down, break down below this low we made yesterday, that's a warning sign that we're going down probably bigger. And if we break back higher than this, probably going to push up to another fib line. So this is one of those where it's kind of bucking what I expected. And as long as we stay above this high right back here, as long as we stay above that level, still have upside potential. Break down below it's probably getting something bigger cooking. This is lofty, so be careful. Bitcoin still sitting, doing nothing. Probably going to carry this into the new year here. Look at it. This is really interesting. Every time we come up to that level, this looks a lot like the way they run accumulation. There seems to be a pretty solid floor right down here. Every time it gets a little sparky, somebody jumps on and sells the crap back out of it. So, kind of interesting. It's usually the way big accumulation works. When they're done accumulating, and I say accumulation because we're not at the top of anything. Distribution typically happens at the top, accumulation happens at the bottom. Once accumulation is complete, we have a markup phase. But this price action does make me nervous because it can easily result in another flush down if these lows don't hold. It just looks like an accumulation, but could just be churning people out. We do one more final flush out, get down in the 75s, then we do a weak rally back up, hit resistance, and then prolonged sell-off. So even though this may have a little markup phase, we still have major resistance to clear before we're doing anything bullish. This is still a bearish pattern, still well under the roadmap line on both Bitcoin and Ethereum. NKD, my global liquidity indicator, not really indicating much of anything except consolidation. Very similar to Bitcoin. Came off the highs. And we're just sitting. Lower highs, higher lows. Watermelon seed squeeze. Does it pop? Does it drop? I don't have a good answer for that. Remember, everybody, today at 5 p.m., I do my request show. That's the only time of the week where I do, basically requests from the audience. So make sure you come 5 p.m. Eastern. Come hang out with me. Be the last one for 2025. In at least 30 minutes of requests. We'll do an Ask Me Anything at 6 o'clock for channel members. So if you want in on that, make sure you're a channel member. Dollar index has pushed down below that 98.5 magic level. Probably set the stage to make a lower low. Lower than the September low back here. Just a matter of time, and this could take well into next year before this one plays out. The dollar is not exactly the fast mover of the family. Apple has pushed below this uptrend I had drawn on here. Back tested it from the bottom. This is a caution that if anything on the downside gets going very aggressively, we could see this push on down pretty big. Amazon stalling out at another lower high. If we bust through the daily roadmap line, this is probably going to take a bigger spill. Google. So far, we back tested the 304 area. 337 still in play. As long as we're above that, if we get below it, next consolidation level down is around 250. Meta, still looking for this to make one more push down. I would really like to see that push right into that 630 level. One more push down. Bounce right there. And that would be break back above that high. That'd be a beautiful setup. We have to clear that gap down, but once we do that, it's probably on the path to 1300, and that could take a couple years, but looks pretty nice. Microsoft still stuck under this daily roadmap line. Indecision abound here. We're at the top end of this consolidation, but any weakness is going to push us back to the bottom. And if we get below this little zone right here, take a bigger spill like Meta did, down around 415, 420, 410, 420. NVIDIA has maintained underneath this 195 level and still provides downside potential to revisit 150. Right in there. That's the breakout level from last year this time. Kind of topped out, and then we went on a retrace, and now we're potentially going to come visit that again. If we can hold above it, higher prices, but if we break below it, bigger retrace like Microsoft Meta did. Microsoft potentially has, Meta did. Tesla still working on this retrace, probably coming back down to this zone. We stalled it out. We hit the upside target. That was the high. This was the low. That was the extension. Now we're coming back for the retrace. See if we can hold here. If we don't, we have the roadmap line coming up, and all this may come together out here near earnings and then set us up for potential going higher. So probably looking at a couple week retrace here on Tesla. Netflix still holding on to this support, and I'm looking for this to actually make a move higher into the roadmap line, but we could just sit here and consolidate into earnings. So that's entirely possible. Now I go pull gainers, things moving up $2 or more in the pre-markets, put them on the gainers list. I pull things moving down $2 or more, put them on the decliners list. Hunt for opportunities. There's one setup ready for an entry today, potentially. And so stick around if you want to see all that. And then at the end of the show, I'm going to give you my bias for the day. ASML, nice little pop here, but still has the potential to come back down to the roadmap line. That's what that looks like. GDXU, This is 3x leverage on gold miners. Be careful. This is starting to look like we've played this out a little bit. Tops are processes, bottoms are events. This could be a topping process here. AGQ definitely got way over the ski tips here. Be careful. This can come down just as fast as it went up. JNUG. Same kind of chart. Checking out silver really quickly. And we taking this back up. Now, that correction could be enough to push this on up. Next level up, 120 on silver. There was a lot of, like, what caused this big red candle yesterday? Out there. Mainstream media couldn't really put a reason on it. The reason was it went too far too fast. They raised margin rates. Got to reset. But if they break it out again, those raised margin rates don't matter, and we're going to take this on up. So don't fight the trend. Irrational can keep being irrational. PPLT. This is starting to look a little bit like we might get a bigger retrace back to the breakout. That breakout all the way down at 150, so be careful. That's where that last consolidation was. Baidu. Nice pop. This looks like it might be on the way. Move up, retrace, move up. Put us up here at 155. Next upside target. RKLX, which is 2x on Rocket Lab. Did not make a higher high. My patterns don't always work on leveraged instruments. So we made the first move. And potential 5 up right there. So we may need a retrace back down in this vicinity of the roadmap line. It's potential 1, 2, 3, 4, 5. May need a retrace back down in this 30 area before we can bounce again. RKLB. Yeah, we got really darn close to that 1272. Didn't actually tag it, but we seem to be retesting the breakout here. If we can hold on to it, we may push on through up to 89 instead of just stopping at 81. And this is my daily chart setup here. And we triggered the entry back here. And this one actually took the exit right there. Claimed the exit, so I don't know which, I guess it grabbed that high instead of that high. It's interesting. So my algorithm actually took that exit right there, but 89, the next upside potential since we're back testing this this breakout level here. So we're back testing it, keeping above it. 89 would be the next upside. Southern Copper, grinding that 150. If we can break on out, 180 would be the next upside. Molina Healthcare, probably coming up to test the roadmap line from the bottom. Shiny, probably coming back down. Turn that algorithm back off. F1R, that's just a sideways chop. And it's just still in the sideways chop. Big consolidation zone. Tried to break out, failed. Tried to break down, failed. Just a lot of nothing. I don't particularly care to chase stuff like that because there's no trend. AEM. There's plenty of stuff that is trending. Why go after the stuff that isn't? AEM still looks like we're going to revisit this area down here. One more move down. I'm kind of off the gold miners and stuff right now. I made a big chunk in 2025, waiting for a pullback and a consolidation. I tend to pick up stuff that has potentially made a bottom and reverses. NEM was a big trade, and I went after it back here. So we had made the bottom right here, made the move up. We made this retrace to a 618. I picked it up in here. Actually, I picked it up in here in December, and I got spooked out on about half my position here. Rode the rest of it on up to the target land. So I was riding a little too big. When we did that retrace, I was like, nope, I'm not going back to the bottom. but then it finally broke out. So silver, yeah. That goes on higher, 120. WPM, potential to come back. SPC, yeah, not doing much. ETHU, Ultra Ethereum, like this is leveraged, 2x leveraged Ethereum. Cuts both ways. If we're going to break down and go further down, this is going to get kind of ugly here on Ethereum. We right now are holding on to this 618 though. So if we can break back up through the roadmap line, upside could be pretty big. Talking about 400 here, 550 to 400. Nice upside potential, but we're gonna have to do some SOFX, such as 2x leverage on SoFi. Let's go look at SoFi. Still has downside potential. Didn't actually hit the roadmap line. Could take a bigger swing down too. SIL. That one looks like we're kind of topping out a little bit. ONTF. Consolidating sideways. Nice little pop, but that just looks like something I'm not going to trade. Has all the look of a dumpster fire without the reverse split in here. I just don't go after charts that look like that. I need this to be an uptrend, not a piece of junk consolidating at the lows. Decliners, SMX is a piece of junk with lots of reverse splits. Be careful here. This is a dumpster fire. Probably going to come back down to almost zero, if not go out of business. ONC, potential to bounce here, back through 350, upside target 396, CPF. Probably going to come back down. Korea 3X Bulls, no indication that, yeah, I don't really have a way to predict what that might do next at this point. Looks like we're going to come back and bounce here, would be my guess. Kind of, it could keep going, but right now that looks more likely to retrace than it does to go higher. Now, smaller time frame, it did bounce, so we could push on up to 222 area, 225. ETHD, a split has occurred. Just the drawings. Ultra short Ethereum. So remember, splits don't matter for ETFs. It's not the same thing as a company. So, but there are declining asset ETFs, and this one's kind of starting to look that way. So if Ethereum goes up or stays sideways in the long term, this one's probably going to grind down. Now you might be like, what do you mean by a declining asset? Something like this, where it's always going to zero. So this puts leverage on VIX. VIX doesn't go anywhere. It doesn't trend. It just goes sideways. For the last 30 years, we're just going sideways. Never trends. Another one like that. Natural gas doesn't trend. It just goes sideways. So tickers that trade like leverage on VIX tend to go into the toilet because it costs a lot of money to maintain leverage, and there's no trend to ever take advantage of. VXX is another one of those. UNG for natural gas is another one of those. Declining assets, always grinding into the abyss. Oil. So ETHD kind of turning into one of those. And cold here, this is interesting because it's ultra short natural gas, but it also starting to be a declining asset. Because, well, whereas it doesn't go higher, it also doesn't go lower. So LMT. This one is set up for a potential entry today. Grabbing the daily charts. There was the high, there was the low. Clean it up. Got that high right there. We've got this low right here. We've got the entry right there. We got the target at 527. And that's the one and only ticker that was on the list today. Now, look at the history of this baby. I love how they redid the numbers down here. 27 trades, 81% profitable, and a profit factor 7. This is a pretty good one as far as history goes. Might be worth a shot on that one. Now, 45, it can take 45 candles. These are not days, that's candles. 45 candles for this to play out an average. Standard deviation on that is 35, though. And 3 standard deviations added to it gets you roughly 150 candles. That's 7 months if you're going to buy options. And you don't want to run out of time. That gets you to that 99 percentile. Still leaves you 1% odds that you might run out of money, or run out of time. Run out of money. Run out of time. Now, could it play out in 45 days or less? Yep. Could it play out in 1 day? Absolutely. Could it play out in 8 months? Absolutely. Anything's possible. That's the average, 45. That's how long, if you want the 99th percentile, 7 months. If you're trying to play options, if you're just trying to play shares, you have no time limit. So be careful right there. As always, permacautious. I'm not trying to be bearish, just permacautious. I don't like to lose money. Evidenced by this chart right here. You're like, how do you keep it going higher all the time? Because I don't like to lose money. I do take losses. They're in here. They're just not very big. Because I don't like to lose money. I like to make money. I like to make money pretty much every day. So that's the consistent income aspect of this account right here. So my bias for the day, cautious watching those levels, right? We're going to watch this level right down here, 68.90 area, break down below it. It's a sign we're going lower. This level right up here, it's the first sign we're going higher. So far we haven't breached it. And let's see what the gamma levels tell us. I can figure out what I did with those. QQQ. Yeah, we're sitting right under this pocket. We may hang with this pocket for now. Tomorrow doesn't really have much of anything. And then Friday, we've got this big level down here that may act as a magnet. So we may get a kind of a coast into tomorrow, possibly a slight upward move, and then take a trip down here into Friday. Maybe. This is like reading tea leaves. So it's kind of like swirling around in the cup and trying to read what the options market's telling us. The market can still do whatever it wants to do. We have a bigger level coming up right here. Now this half the size. Now this is just QQQ. SPY has way more weight than QQQ as far as gamma goes. And we're just sitting right at this gamma level. So we may churn this off today. We may stick right in this zone. Could drift up to 690 and come right back down. I mean, we could just hang out right here in this area. The bigger level, looking into the end of the month here. Tomorrow, just don't really have, we've got a couple of levels stacked in here, but we're just, looks like we're sitting right in this bubble. We may hang just right in this area right into the new year. So it doesn't look like the market's pricing in a lot of excitement through Friday. That's what I would say. Not a lot of excitement. That doesn't mean we can't do some sort of craziness, but so QQQ probably not going to outweigh the SPY. Just keep that in mind. SPY has way more option volume than QQQ. So That's what we got cooking. Remember, 5 p.m. I'll be back live right here on YouTube. Coming up at 11:30, I'll be live. Links in the description on Market Masters with Jack. And I think they broadcast that on the Financial Wars YouTube channel. Also, so everybody, hope you have a great day. Remember, just 2 trading days left, and we're already into the first one. So tomorrow is it for 2025. Have a great day. Stay safe out there. The account you save, maybe your own. Nobody's watching out for your money more than you are, so please try to take a vested interest in your financial well-being, and we'll see you again later. Come back and see me at 5.